Good morning and welcome everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Well, it's an auspicious day, for India, and in that sense, it looks like it could be an auspicious day for the markets as well. Santo, the wild ride for the markets continues, it seems.
Well, not really surprising there, given the upheavals that we are seeing in global markets, and some bit of it is bound to flow into India as well.
Yeah, but Santo, if you look at today's setup, it looks quite good. I mean, the exchange Nifty is indicating almost a 250-point gap up open for the Nifty 50 index. Wall Street yesterday rallied quite sharply, and I mean the reason for that largely is that the fears around the global financial risks that were developing last week in wake of that UK government's fiscal plan and then the impact it had on the pound and the UK gilts market, that seems to be subsiding because yesterday the UK government came out and scrapped a part of its overall plan. It was a very small part, but at least that has given the indication to the market that the government is willing to bend and look after investors' concerns as well, and that really has moderated some of the risks that were being associated with the likes of you talk about Credit Suisse, we spoke about Credit Suisse, Deutsche Bank, the US gilt markets, and all those sort of markets where there was a lot of concern bubbling up. Clearly, that has abated for the timing. We'll have to wait and watch if this is a dead cat bounce or whether maybe the market has climbed another wall of worry.
Well, the problems have not entirely gone away, CJ. So, for instance, if you just mentioned that part about the UK government slightly diluting its rules, but that is for the top end of the taxpayers, which most analysts say that it's not really much of a game changer because the government still plans to go ahead with the rest of the tax cuts as well as the borrowings that will be need to fund it. That's one part of it. Besides, I don't think the Credit Suisse and Deutsche Bank issues are still completely out of the way. Some relief there, some bit of a
stock ended at a record low yesterday. So clearly
that is also again very much it's very much there. The problem has not gone away. And lastly, if you see back home, now tomorrow is a holiday, trading holiday. So will bulls want to take up a lot of positions given the way global markets have been quite volatile? So I'm not sure if this rally will be able to, it could well sustain, but I would say the probability is that you may see profit taking towards the close.
Absolutely.
But one interesting thing yesterday, CJ, is that it's after a very long time you've seen the markets down in a big way and yet FIs being net buyers at the end of it. That's a very surprising trend. Now we have to see whether if it has to do something with action in this arbitrage activity that FIs have been doing. But clearly, I think we have not seen something like that in a very long time.
Absolutely, Santo. And I think probably retail was the one that panicked yesterday, especially with the entire frenzy that was being created around Credit Suisse and Deutsche Bank. And if you spent a little bit time on Twitter, you could understand that there was a lot of sentiment being drummed up, exaggerations being drummed up yesterday. And I'm pretty sure that probably that is one of the reasons why we have seen an FI net buy figure, whereas the market still ended almost 1% lower yesterday, largely because probably the selling was driven by the retail crowd.
And CJ, the other thing I feel is that so far the Q2 updates which have come in, at least for the leading companies, they have been pretty decent. So in all probability we could see decent set of Q2 numbers. At least the second quarter number should not be a big disappointment. But that said, I guess volatility and extremely stock specific move will be the
I mean, we are getting
October.
into that season now. We are getting into the earnings season from next week. That said, talking of quarterly updates, let's quickly move on to some of the stocks that we feel that could be in action today. And starting off with
Mahindra and Mahindra, strong September sales there reported by the company. You saw the company reporting SUV sale, utility vehicle sales of over 34,000 crores, record total sales as well. And the best part, I would say the most interesting part, is that even in the tractor segment, which was supposed to be one of the weak links in the overall chain, there also the performance has been pretty decent. The highest ever tractors sold in a single month, around 47,000 units. And the company has said that festive demand has been quite strong and it expects this momentum to continue in October as well. Now we are going to see the Kharif crop harvest and prices have remained firm so far. So all in all, probably demand should continue to remain strong. Besides that, the response to M&M's recently launched XUV 400 has also been pretty decent. So it's been one of the companies which are slightly late to get into the electric vehicle game, but having gotten there, it seems to be making pretty steady progress there. So all these put together, I think, puts Mahindra and Mahindra in a sweet spot at this point in time.
Well, Santo, clearly, I think if you look at the fundamentals, there is a lot to like about M&M. Not only, I mean, of course, the demand traction that its sports utility vehicles are seeing, the tractor business is seeing, but also the capital allocation decisions that the company has been taking recently, which of course was the biggest bugbear for the market for a long time in the past. That said, if you look at the price action, Santo, it seems to me that maybe market is indicating that a lot of that optimism maybe now have been baked into that price, and therefore I'm a little skeptical as to how much upside M&M could provide you, especially in the short term. I mean, if you look at the technical charts as well, they're right now exhibiting a bit of a neutral trend. It doesn't seem like the market is either bullish or bearish on the stock at this point of time. Some of the daily momentum indicators like RSI is sitting around level of 44, 45, which is generally hovering closer to oversold territory than to overbought territory. So for me, I think this is one stock that probably could consolidate more going ahead. It seems like there is a bit of weakness creeping in, maybe profit booking creeping in from long time holders of the stock. But putting that aside, of course, the fundamentals are looking quite good. Another stock, well, where the fundamentals will be in the focus today will be Avenue Supermart, or which we better know as D-Mart. The stock, likely to probably gain today on the back of very strong demand traction that the company has seen in the second quarter. If you look at the second quarter numbers, 36% year-on-year surge in sales, almost 6% sequential rise in sales, and Morgan Stanley believes that if you look at the sales number, then that could imply a same-store sales growth of about 15%, which is a very, very healthy trend at this point of time. Let's not forget that the Q2 of last year also was quite a good quarter in the sense that it was after the second lockdown had opened, and you had seen a good amount of pent-up demand come back to retail store owners. That said, the only worry for me, Santo, would be the slowing of the pace of addition of store openings that the company was doing. The company had opened about 8 stores, I think this time around, and this was below what market was expecting. They were expecting at least 10 store additions in this quarter. But that said, Morgan Stanley believes that the company is still on track to achieve the 40 new store additions that they plan in FY23. The other one good, one muted thing was the fact that the recovery into sales has only reached 93% so far compared to Q2 of FY20, that is 2019. Most were expecting that by now the company would have reached 95%. So I think besides that, everything else looks quite good.
Well, no doubt, CJ, and also that part that you mentioned about store addition, it cuts both ways. If you're expanding in a big way, it also means pressure, more spending, and it also means pressure on the margins for the time being. And besides, the chatter in the market is that the company is really looking to step up its presence in the e-commerce space. It has a subsidiary by that name, and it has at least that's the chatter for now, that the company is having some big plans there. The second part, CJ, is that my only quibble with this stock has been the high valuations. But when you look at numbers like second quarter sales jumping 36% year on year, then that in a way gives room for the bulls to justify those kind of valuations. So I don't see the stock coming off sharply unless overall market takes a dive for the worst.
Santo, I mean, you talk about valuation, but still, if you look at the 3-year chart of D-Mart, it's actually not been a very spectacular performer. I mean, last year, yes, was a very, very strong year for the company, especially towards the latter half when the second wave, the lockdowns ended after a second wave. But in 2022, the stock had suffered, earlier in the year, because at that point of time, investors were very averse to owning any sort of richly valued stocks, or which they perceived were very, very rich. And therefore, the first half of this year, the stock went through a meaningful correction. So I think on the valuation front, probably there should be a little bit of comfort for fund managers as well as retail investors.
Well, the stock price moved up very sharply. See, it's been just barely 5 years since the company has listed, and look at the stock price performance in these 5 years. So anyone who's holding the stock for 5 years, or even in the last 3 years, at least there's a very low probability that probably he would have lost money.
Absolutely.
So valuations have, I won't say they are cheap at this point in time, but the market seems to be comfortable paying that kind of valuation, and it's only in extreme market conditions like you saw earlier during the early part of this year, or even in last October, when these stocks come off very sharply. But at the first whiff of anything positive, you once again see the bulls clambering back on that.
That is true.
Well, Gokaldas Export is the next stock now. The stock was in the limelight yesterday, up 5%, among the best performers in a weak market, and that's to do with the fact that Abu Dhabi Investment Authority picked up about 15 lakh shares at 349 rupees a piece. Now, few things going well for the Indian textile space in general, and a couple of things according to analysts tracking the sector is that earlier China's cost structure was very favorable. They had a big advantage, and that advantage does not seem to be there anymore. At least that has reduced considerably. And the second part is the US ban on products made in Xinjiang. That is creating a lot of problems for other competitors like Bangladesh, Vietnam, Cambodia, which are now looking at alternative supply chains. That's becoming that's working to the advantage of Gokaldas Exports, clearly, in India being the largest producer of cotton as well. Besides, the company is set to increase its sales by at least 43% over the next couple of years and almost close to double. That is according to Spark Capital, which tracks the stock. The management is also sounding pretty upbeat. It has said that it will be done with its capacity addition by the end of this year, and as for capex, it plans to spend about close to 280 crore rupees over the next couple of years. So, on the whole, it seems to be a promising story, CJ.
Well, Santo, clearly the story has promised, but at this point of time, I just fear that probably the near-term challenges could be something that will be more dominant for the market, especially with the fact that a lot of the textile industry is dependent on demand from US and Europe, and we all know, we have talked about it here on the show, that there is a little bit of weakness as far as the US economy is concerned, and especially so when it comes to Europe. So I would be a little cagey in terms of how the the revenue growth prospects or export demand prospect looks for a company like Gokaldas Export, even though it is trying to replace some of the Chinese suppliers that existed in the market. We have already heard reports that because of the surging inflation that we have been seeing in US, a lot of the retailers there, like Walmarts of the world, have been trying to curtail their inventory buildup because they don't want to be holding a very highly priced inventory or stock at their end. So therefore, I think there could be some near-term challenges, but overall, of course, from a longer-term perspective, this is part of the China plus one growth theme that the market has been talking about for the past 1.5 years, along with, say, chemical companies out there. So it is clearly a story to watch out for.
But the management was on CNBC TV 18 yesterday and mentioned that so far they've been seeing that growth from US has been holding up pretty steady.
Yeah, I mean, we'll have to wait and watch. I mean, that is so far, but market will always try to look forward, right, Santo? It will never be content with what is happening in the here and now. That said, the next stock on my radar today is from the banking space, and this is IndusInd Bank. Very, very strong update from the company. The lender has been continuing the very solid performance that it has been posting over the past few quarters, Santo. I mean, last year, this time around, it was actually one of the laggards in the banking sector, and since then it has clearly been among the outperformers. Now, if you look at the granularities of the performance, 18% year-on-year growth in advances or loans that the company has seen, which is almost on par, almost reaching on par to bigger rivals like ICICI Bank and HDFC Bank out there. Apart from that, the CASA ratio or the current account savings account ratio also improved, which basically is indicating the cost of funding should probably be much more favorable for the company going ahead. Now, this is, IndusInd Bank's biggest problem, of course, was the NPA thing. We have not seen the NPA numbers being updated in the business performance update that the company has given. But when the earnings do come out, I would expect that asset quality also will be improving sequentially, Santo.
Well, the stock has been going through a re-rating of late. There were a lot of concerns last year, and much of that seemed to have abated over the last few months. And it also did well because you've seen a generally positive wave in favor of private banking sector in general. And after investors got into the top tier stocks, they've now been moving down the line and looking for stocks that are available at reasonable valuations, and that is probably where IndusInd may have seen its fortune change. And now with some strong updates there, probably I think you could see the momentum.
Yeah, I think, Santo, a lot of analysts also have been talking about preferring more IndusInds and Axis of the world than ICICI and SBIs, given the upside that is available.
Well, and as expected, a very strong start to the day, CJ. 246 points up on the Nifty. close to 1763 stocks up at this point in time, and less than 100 stocks are down.
Wow, that is a
Nifty
very, very
mid-cap
strong
is up
move.
nearly 2%, Nifty Bank is up close to 2%. So a spectacular start there, but again, as we discussed a short while back, remains to be seen if traders bulls would be willing to carry over huge positions.
I think this is clearly a relief rally, Santo. I think the relief that has come into the global markets after UK's decision, and the hope that probably it will not, culminate into a financial crisis that a lot of people were talking about over the weekend. I think this is generally a representative of a very, relieved market at this point of time, and that is why you're seeing some bit of short squeeze also in the market. You can see that in the India VIX as well. The India VIX index is down about 6.5% after surging almost 8% yesterday. The mid-cap space clearly almost going on par with the Nifty and Sensex, higher by about 1.7%, while the Nifty small cap, if the chart can come up, is up by about 1.5%. So very, very strong start, and the hope would be that we can continue this into the Dussehra holiday tomorrow.
Well, the bulls at this point in time, if you look at the movement over the last few days, it's almost like running at a treadmill. They're running, but
you're not going anywhere. You're not going anywhere.
So last stock on our watch list this morning is Federal Bank. Again, strong second quarter update. The stock has been seeing a positive trend for the last month or so, and probably these set of numbers which it has updated, that should probably help the stock sustain the uptrend. And the company appears to be on track to meet its loan book growth of 18 to 20%, which is what it had guided. And according to the management, the strong demand which was seen in the first quarter has continued in the second quarter also, and it expects this to continue for the next couple of quarters. And the best part about the second quarter update is that the loan growth was broad based across all segments, and even at the corporate top end, the management has said that the pricing has been pretty good.
Well, Santo, it's very difficult to find a chink in the armor of Federal Bank at this point of time. The stock has both the business momentum as well as the price momentum behind this, and therefore, as a trader, if you're trying to fight the trend, I think you'll probably in for a bit of a loss. So probably go with the trend. कहते हैं ना कि बहती गंगा में हाथ डुबाना type का basically.
Or trend
I think
is
that
your
is the
friend.
sort of situation. Yeah, or trend is your friend basically.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do remember to post your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. Till then, have a great trading day.